SpaceX just pulled off the biggest IPO in history and made itself worth more than Tesla overnight. On June 12th, Elon Musk's rocket company hit the public market and raised $75 billion in a single day, not 7.5. 75. That is 3 times bigger than the previous world record, and it instantly turned SpaceX into a company worth roughly $1.8 trillion. Let me put that number in perspective. For years, the largest IPO ever was Saudi Aramco, the Saudi oil giant, which raised about $25 billion back in 2019. SpaceX did not just beat that record, it tripled it. Demand was so heavy that the offering was oversubscribed 4 times over, with more than $250 billion in orders chasing the shares. Here is how the day actually went. SpaceX priced its stock at $135 a share the night before. When trading opened on the Nasdaq under the ticker SPCX, the stock immediately jumped to around $161, a 19% pop on day one. By the close, the company was valued near $1.8 trillion, leapfrogging Tesla, the other Musk company, to become one of the most valuable businesses on the planet. And in an unusual move, Musk set aside roughly 30% of the shares for regular retail investors, everyday people, not just Wall Street funds. But to understand why investors were willing to pour $250 billion into a rocket company, you have to rewind 5 months. Because SpaceX in June is not the SpaceX you remember. Back in February, Musk did something nobody had ever done at this scale. He merged his artificial intelligence startup, xAI, the company behind the Grok chatbot, directly into SpaceX. The combined value of that deal was $1.25 trillion. SpaceX was valued at $1 trillion, xAI at $250 billion, and the two became one company. It was, by dollar value, the largest merger of all time. So why would a rocket company swallow an AI startup? 3 words: orbital data centers. Musk's pitch is audacious even by his standards. Artificial intelligence needs enormous amounts of computing power, and that computing generates enormous amounts of heat and eats a staggering amount of electricity. On Earth, that means power shortages, water for cooling, and angry neighbors. Musk's answer is to move the data centers off the planet entirely. The plan is to launch a constellation of up to 1 million satellites that operate as data centers in space. Up there, solar power is nearly unlimited, and the cold of space handles the cooling for free. SpaceX already builds the cheapest rockets in the world and already runs Starlink, the largest satellite network ever created. Add xAI's models on top, and Musk claims he is building what he calls the most ambitious, vertically integrated innovation engine on and off Earth. Rockets, artificial intelligence, space-based internet, and the X social platform, all under one roof. That is the story Wall Street bought, not a rocket company. A bet that the future of AI lives in orbit, and that SpaceX will own the launch pad, the satellites, and the models all at once. So the question every investor is now asking, is $1.8 trillion actually justified? Let us be honest about both sides. On the bull case, SpaceX is the only company on Earth that can launch this cheaply at this scale with a real AI lab attached. If orbital data centers work, the upside is almost unimaginable, a near monopoly on the infrastructure of the next computing era. That is why demand hit $250 billion. On the bear case, almost none of this exists yet. Orbital data centers are still a concept, not a product. The company is now valued higher than nearly every business on the stock market, based largely on a promise. And a huge chunk of that promise rides on one man, Elon Musk, who is also running Tesla, X, and a political life. If the space data center dream slips even a few years, that $1.8 trillion price tag could look very stretched, very fast. Lawyers are already flagging the unusual governance and the risks baked into merging 2 Musk companies right before taking them public. There is also a bigger picture here about the money itself. $75 billion just got pulled out of the market and handed to a single company in a single day. That is capital that could have gone to 100 other startups. It tells you exactly where investors think the center of gravity in technology now sits, at the intersection of artificial intelligence and space. And with roughly 30% of shares going to retail buyers, millions of ordinary investors now have a personal stake in whether Musk can actually build a computer network in the sky. So here is what happens next. SpaceX now has $75 billion in fresh cash to spend, a public stock price it has to defend every single quarter, and a promise it has to start delivering on. The first real test will be whether it can put actual working data centers into orbit, not a prototype, but something that earns real money. If it can, this IPO will look cheap in hindsight. If it cannot, it may go down as the moment the AI boom finally floated too far from the ground. So what do you think? Is SpaceX at $1.8 trillion the smartest bet of the decade, or the biggest bubble of the AI era? Drop your take in the comments, and if you want the biggest moves in AI and money broken down like this, subscribe to MindBlitz.